This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. That's little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Michael Casey, filling in for Christine Lee all this week. Okay, looking at our top stories. Senator Elizabeth Warren, who, as you might remember, last month stridently criticized Bitcoin's energy consumption, has given SEC Chairman Gary Gensler a 3-week deadline to come up with clearer crypto regulation. In a letter to Gensler, the chair of the Senate Banking Committee's Subcommittee on Economic Policy asked that the agency define a framework for regulating crypto exchanges by July 28th. Regulators in Korea also seem to be getting tougher on crypto. 33 people have been investigated for illicit cryptocurrency transactions totaling $1.48 billion. 15 of them were fined, 14 referred for prosecution, the remaining 4 are still under investigation. Meanwhile, Circle, which issues the USDC stablecoin, has announced a public listing via a SPAC transaction that valued the company at $4.5 billion. The Circle news came on the same day that China's central bank raised concerns about stablecoins potentially fostering financial instability. That comment seemed to feed a sell-off in Bitcoin markets earlier, as it put a spotlight on the role that Tether, the stablecoin, plays in BTC exchanges. Okay, if we check in on the price now, you can see that the CoinDesk Bitcoin price XBX index is still down. Let's take a look. 5.22% on the day. That's 32,867. Okay.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Okay, time for the chart of the day. The CoinDesk research team has gone out on a limb and concluded, I'm sorry to report, that Bitcoin is in a bear market. CoinDesk research created a simple litmus test for demarcating bear or bull market territories. If there's a change of at least 20% in the CoinDesk Bitcoin price index, XBX, followed by 90 days in which Bitcoin does not return to its previous high or low, that marks the change. In reality, we're still 5 days shy of that 90-day benchmark, but we're a long way from the 65,000 high reached in mid-April, and so the team felt safe making this gloomy call in their Q2 research report. Let's see if our next guest agrees. Technical analyst Katie Stockton of Fairlead Strategies joins us, and she's going to share with us her Bitcoin markets analysis and a couple of charts of her own. Welcome, Katie.
Thanks for having me.
So, bear market, are we in one or not?
I don't think so. So not by my measures. It's obviously been a very significant correction, and I don't want to minimize the damage that's been done to some folks' positions. And yet, based on the technical indicators that we track, from a long-term perspective, Bitcoin is still very much in an uptrend. That goes from a monthly perspective, looking at momentum gauges, and even from a weekly perspective, looking at support levels. And they do move higher over time. So we still are assuming that we're in a long-term uptrend for Bitcoin. And now we're watching to see more of a reaction to what is an intermediate-term oversold reading.
Well, let's pull up a chart of yours to take a look at what you might have to say about that. You know, you've got some resistance and support levels there. Walk us through what we're looking at here.
So I'd say that the real takeaway right now from a short-term perspective is that Bitcoin has been in a consolidation phase. It's sort of stuck in the mud around 30,000 and has been trading mostly sideways since then, but with its usual day-to-day swings. Now, what we've been watching for is a reaction within this trading range to the intermediate-term oversold condition that's associated with it. We want to see either a breakout or a breakdown from the range to help give us that next sort of intermediate term directional input. For us, we think a breakout is more likely than a breakdown based on the prevailing long-term uptrend. And that for Bitcoin would occur above its 50-day moving average. We have to use round numbers because it's moving very quickly. But let's say it's just about 36,000. Above that, that's where we start to get interested again in Bitcoin in terms of momentum. That would mark a momentum shift to the upside.
Is there anything fundamental on the horizon that might take us there, do you think? Is there something beyond these technical indicators that could push us through that level?
Well, Well, it would certainly be a fundamental driver that would create that kind of breakout. The charts won't tell you what that driver will be, unfortunately, but it can help you understand whether it's just noise, what we're seeing in terms of reaction to news, or if it's more meaningful. And indeed, if we see a couple of good closes above that 50-day, that would suggest it's a meaningful short-term breakout, and the targeted level would become secondary resistance. If the chart that you're showing contains something that looks like a shaded cloud, that's the cloud model, and that upper boundary of the cloud shows resistance around 44 to 45,000 for Bitcoin. It's pretty well aligned with the 200-day moving average, and that would be your secondary hurdle for Bitcoin. And of course, if it was at that level, then perhaps people wouldn't be talking about a bear market anymore. So to us, that breakout about the 50-day would be very significant. We did see Ethereum climb above its 50-day moving average pretty decisively yesterday. It did not hold that breakout today, and that's okay. It doesn't mean it still can't happen, but just let's suffice it to say that these levels are in play.
Well, speaking of Ethereum, you also have a chart showing how far Bitcoin has dropped versus Ether, which of course has fueled the decline in the so-called Bitcoin dominance metric, which we use to measure relative market cap among crypto tokens. Yet overnight, Ether fell. You just mentioned this more sharply than Bitcoin. Is Bitcoin dominance bottoming out here?
What I would say is that the long-term trend does favor Ether over Bitcoin. However, we see Bitcoin as almost like the defensive play within the cryptocurrency space. And this is a chart that we publish every week in our research to subscribers. And we track the short-term swings, but the long-term trend does really favor Ether. Now, from more of a sort of a risk on, risk off perspective, we have seen some rotation with the downdraft into Bitcoin because I think folks are seeing it as more of a safe haven, a safer play. And I think if we were to see those breakouts above the 50-day moving averages, perhaps we'd see Ether sort of take charge again, exhibit upside leadership, at least from an intermediate term perspective in that kind of scenario.
Yeah, it's an interesting perspective, looking at Bitcoin as the conservative play and Ether as the potential sort of breakout, faster mover. Thank you very much, Katie. That was technical analyst Katie Stockton of Fairlead Strategies. Coming up, an infrastructure discussion with Metaco. Welcome back. Based in Lausanne, Switzerland, the crypto financial infrastructure firm Metaco has come a long way since our next guest co-founded the company in 2015 with a Bitcoin core contributor. Part owned by the telecom provider Swisscom, Metaco enables financial institutions to issue, secure, manage, and trade digital assets. Clients include some top banks and exchanges around the world. Joining us now to discuss is Adrian Decani, Metaco founder and CEO. Hi there, Adrian.
Thanks for having me, Michael.
You're most welcome. So there's a number of big institutions, some large banks on your client list. Where are they with regards to investing, holding, and trading Bitcoin at this stage?
So I would say that the last couple of years have been very interesting in terms of market adoption, even by some of the most conservative banks on the market. It's not been equal over the different regions globally. Clearly, Europe and particularly Switzerland have been leading the way. Southeast Asia with Singapore has been also driving very strongly towards the adoption of digital assets. However, we've seen America and the US in general being a bit behind in terms of regulatory approval and regulatory clarity. So I would say that our clients and many of the banks that have moved are now becoming comfortable dealing with cryptocurrencies. They are opening up to the ideas of leveraging some of the DeFi protocols, but we're still at the early stages on that front.
You've talked a lot about building bridges between the traditional banking and the decentralized financial world of crypto. Tell us how that plays out. What do those bridges entail?
Well, when you think about all of these crypto companies that have popped up over the last 10 years, most of them can reinvent everything from scratch. They can build a new service. They can create something which is digitally native. It is about Bitcoin, it is about Ethereum, it is about DeFi, and they don't have to think too much about all of the legacy infrastructure. When you now put yourself in the shoes of a bank, the bank has potentially hundreds of thousands of clients. It has connectors to all of the existing protocols. It has clients that have habits. And the challenge is to say, well, if I want to now offer Bitcoin or offer Ethereum, how am I going to do this in a way that is still compatible with what my clients are used to in terms of reporting, in terms of interfaces, in terms of e-banking? And so when we speak about bridging the two worlds, it is about helping and supporting banks that today have an infrastructure which may not be compatible with cryptocurrencies, and providing them with the tools that they can just add cryptos and DeFi to what they already have and make it feel seamless, making it feel the same way as traditional currencies, equities, or other asset classes that they already deal with.
And how far away are we from that being, something relatively seamless? It still seems to me like there's a lot of barriers to bridging these worlds.
Oh, there are a lot of barriers. I'm going to share a little story about with you, which is that one of the first frictions we faced was, in fact, integrating Bitcoin into the traditional core banking software platforms out there, which did not support more than 4 digits, 4 numbers after the comma. And when you think about Bitcoin that has plenty and Ethereum that has even more, that was one of the first challenges to fight and solve. So I think we are making progress. The industry as a whole is making progress. There are big names today that are already active in this field, whether it's DBS, Standard Chartered, Northern Trust, BBVA. And I would say that they all go through the same challenges, but there is now a willingness to be part of this ecosystem and to make sure that you don't miss out.
And do you see, therefore, since you've been focusing quite a bit on DeFi of late, this exciting new world of decentralized insurance and decentralized credit swaps and all these different mechanisms by which some of the more traditional forms of finance are now finding their way into that decentralized architecture? Do you see that becoming the norm for how the financial system itself operates in that liquidity sense?
I am wondering, because ultimately DeFi is about facilitating interactions without intermediaries. And you could think about a model where people start trading, borrowing, lending, investing completely outside of the regulated banking sector. I don't think this is going to be the case that it leads the way people interact with each other, but I think it is a powerful force that banks will have to adjust to. Now, with respect to the banks today, I believe that cryptocurrencies benefit from much more regulatory clarity than they used to over the last 5 years. However, with DeFi, there is still a lot of doubts about where this is going, whether trading, peer-to-peer trading, decentralized exchanges, lending and borrowing are going to be things that the regulators are going to be happy with. So we see interest, we see willingness to get involved, but particularly regarding proof of concept, MVPs, but not yet in production with most of the banks we interact with.
Okay, and since this is the All About Bitcoin show, a question about Bitcoin as it pertains to this. Some people talk about the role that Bitcoin might play in a DeFi world where it becomes the base layer of collateral, that it is something that ultimately you hold as that safe reserve asset, and then everything else is built upon that. Obviously, that might look like something of a replacement for treasuries in some respects. Do you see that playing out? What is the role for Bitcoin in this decentralized financial future that you're looking at?
Well, I believe it is a very interesting possibility. Bitcoin is indeed, as part of decentralized finance, one of the most stable and trusted assets. Needless to say that looking at the markets when everything starts collapsing because the momentum is bearish, generally you either go to a stable coin, which is dollar or some form of it, or you go to Bitcoin or a combination of both. So I certainly can see a future where Bitcoin is the basis of the collaterals that you use to stake or to secure some of the interactions you have in DeFi. I still believe that it is not as practical as some of the other possible collaterals like Ethereum itself, in the sense that it is not natively supported as part of DeFi protocols, and therefore it is widely used as a wrapped version on some of the Ethereum protocols. So I hope that Bitcoin has the ability to increase its DeFi capabilities. And I think that there are many initiatives to go that route so that it doesn't need to be used as a more centralized version through a wrapped Bitcoin.
Interesting stuff. All right. Thank you very much, Adrian. That was Adrian Treccani of Metaco. And that's it for All About Bitcoin. I'm Michael Casey. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV. Bye for now.